What's going on to the AMC stock family? In today's video, we're going to be talking about an insane bet that just came in for AMC. And so because this is extremely relevant, I don't want there to be a lot of paper hands. And so that's why I'm going to save this in the beginning of the video. But if you guys have not already, make sure you guys share this video with your fellow AMC investors so we are constantly updated on a day-to-day basis about what the true news is and how we can block out the external noise. Because this is honestly very bearish, and I'm going to be talking about all the bearishness that just came in for AMC. Now, first off, let's talk about the short interest surrounding AMC stock because surprisingly, this number has been increasing. I'm not sure why there are many investors and many institutions and even many hedge funds that are continuously increasing their short position on AMC, which is one of our favorite stocks right now just because of how phenomenal of a reopening play it is. And so AMC Entertainment, we have a short interest. This represents short interest shares at roughly 92.4 million shares. This is not even the dollar monetary amount of people shorting AMC or selling AMC. This is just simply the amount of shares out there that people have decided to sell. So this monetary value is going to be even higher. However, we don't know that exact value yet because we don't know how many people, first of all, are shorting AMC, and second of all, we don't know what their average cost basis is. There are also other stocks that are getting heavily shorted as we speak right now, and one of them is ticker symbol CLOV, and the other one is Gamestop. So Gamestop is actually ranked second on this list, coming in at 7.5 million shares. And I know that AMC has more short interest shares, but I believe that this is based off of a rank that this website is giving them. And so over here, the Lucid rank is number 1, number 2, number 3, etc., etc. And I believe this is also determined by various variables. For example, I do believe that this website takes into account the amount of float, or in other words, the number of shares outstanding, and has a lot of other variables that they take into account as well. And so many people wonder, why is AMC not higher than GameStop? The reason for that is because GameStop has a much lower float. If you have a lower float, that means that there is less supply. Less people can buy the stock, and if more people have demand, that creates a short squeeze way more than any other equity. For example, we could take into account Workhorse over here. This has a 113.8 million float. These are the number of shares outstanding, but this is no comparison to ticker symbol GME that has a float of 63 million. 63 million is much lower than that 100 million that we were just talking about, and so that's why GameStop has a much higher ability of going higher. And this is also true for AMC. That is why when you compare GameStop to AMC, AMC is lower, even though there's an insane amount of volume coming every single day for AMC. And if we're talking about the volume, let's go ahead and talk about some of ARK Invest's recent holdings. We are going to be talking about Netflix, Roku, and Tesla. Why are we talking about these three stocks? Let's talk about the inverse correlation that is causing a lot of hedge funds, a lot of investors, and a lot of companies confused about what they are going to do with a lot of the general stock market and also AMC and GameStop, because those are considered the so-on-so meme stock. First of all, let's talk about Tesla, ticker symbol TSLA. The reason we are talking about this stock in particular is because Tesla does make up a good portion of the S&P 500. And so if Tesla decides to go down in share price, a lot of people are thinking that that is going to cause an inverse correlation. In other words, AMC will subsequently go up in share price because Tesla and the general market went down in share price. And so if Tesla goes down, usually the S&P 500, or in other words, ticker symbol SPY, which is an ETF, that will go down as well. So if the ETF goes down and that represents the general market, many are believing that AMC will go up. I'll explain this concept a little bit more in just a few minutes, but let's talk about why Tesla is under extreme pressure right now and how this can make the AMC share price go even higher. Right over here, we see the shares held for Tesla, and this was from Cathie Wood's ETF. And we have many ETFs that we can understand. Let's understand the general one. And so on September 2nd of 2021, Cathie Wood had about 3.2 million Tesla shares. However, now she has 3 million shares estimated. 3 million shares from 3.2 million shares. I understand why she did this. She is just simply trying to rebalance the portfolio. But quite honestly, that is irrelevant because AMC is not waiting for anything long-term to happen. In the near term, we need to understand what AMC can do, because in the long term, we already have our guesses for what AMC is going to do. A lot of people are guessing that AMC is going to go higher as time goes on, and I am also a believer of that. That's why I continue to buy and hold AMC, and I have yet to sell AMC shares. It is that simple. But if we want to know what AMC could do on a day-to-day, near-term basis, then this is where all this due diligence comes into play. Because if Tesla is getting under pressure, and we explain that concept about that inverse correlation, then the Tesla share price going down would help the AMC share price go up. And so if we talk about Netflix, this is the volume that I was talking about. So Cathie Wood and her team, they do have some Netflix shares, not a lot. We can see the market share over here, and then we can see the daily change on this underlying equity, but that's irrelevant. AMC has 50 million shares traded on a day-to-day basis. whereas Netflix has at most 10 to 15 million shares traded on a day-to-day basis. Let's also try to understand Roku. I believe ARK Invest does have Roku, and it seems that they do, so let's try to understand the volume for Roku. The volume for Roku is about also 10 to 15 million shares traded on a day-to-day basis, maximum. So if we're comparing AMC to these two large cap underlying equities, and these are all in somewhat of a similar grouping, then that's extremely bullish for AMC because AMC is doing phenomenally well in terms of how much support there is, how many buyers are there, what is the demand, etc., etc. So after that $92 million bet for AMC, which is actually much, much higher, it's not just a $92 million bet, that's a $92 million share amount. The actual monetary dollar amount for this bet is much, much higher because $92 million, that is simply the amount of shares. This is at least a $100 million bet, and that is at the very least. Now let's understand why this is so confusing for a lot of hedge funds, including Citadel. Because if Tesla, let's take into account Tesla, ticker symbol TSLA, on a day, this is not what you want to see. And let's also not forget about ticker symbol AAPL, or in other words, Apple. This is not what you want. I also understand that Apple right now, they do have a bit of problems with some other companies. That is why this is also a red candle on a day. But regardless, both Tesla and Apple are significantly down in just one day. And I know this is not going to have any long-term effects, but since we are talking about the near term for what AMC, Tesla, Apple, or just these blue chip stocks could do, we need to understand why this is happening, and many are signaling that this is simply an inverse correlation. I know I've been talking about correlations a lot, but here's where it's going to confuse a lot of hedge funds, and it already is confusing hedge funds like Citadel because they don't know whether to sell AMC even more or to buy back into it. Some people are saying that AMC and Gamestop should be used as a market hedge because if the S&P 500, which controls the general market, or at least that's where the general sentiment can be made, then people are saying that GameStop and AMC, that's the time to buy those stocks because those two will go up if this correlation remains true until then. And so why am I talking about if it remains true until then? We also see that the S&P 500 went down in share price, but not AMC. Not at all whatsoever. In fact, AMC was one of the most resilient winners on this day, coming in at no loss on the day whatsoever. And the reason why we're just talking about Tesla and Cathie Wood is because if Cathie Wood is temporarily selling some of her Tesla shares, what if Tesla continues to go down in share price over the next few days? Would that mean that AMC also goes up and the S&P 500 goes down, as well as Apple, because Apple is also in the S&P 500? These are why we are trying to understand these correlations, because if they remain true until these next few days, until these next few weeks, and even for these next few months, that could be an extremely bullish sign for AMC, because that would signal that this stock would go even higher. And right now, we are at a very crucial standing point because AMC is so very close to breaking this $51.80 resistance level. That's why this is so important, because we are so close to breaking this resistance level and going back to this new box, this new trading zone that will allow us to be between $60 and $51 a share. And even more exciting news, if Tesla does indeed decide to go down next week because of their new news surrounding their quarter earnings, talking about how Tesla is aiming for a decent quarter for deliveries after the supply chain issues, this is not going to be sufficient enough. This is not going to handle it, because Tesla shares usually rally when there's an earnings beat or when there's an expectation beat in general. And so let's read into this, because Tesla is aiming for a decent quarter for deliveries with a strong end to the quarter after supply chain issues affected early production in quarter 3. A decent quarter is not going to be enough, as I just stated, because a decent quarter will not make the Tesla shares rally. Instead, this might actually have just the opposite effect because of how decent it is, or break even. And last week, we reported on Tesla's CEO Elon Musk telling employees on a call that this is going to be the craziest month of deliveries Tesla will ever have. As is often the case, Tesla has to deliver a lot of vehicles towards the end of the quarter due to its business model to produce vehicles for exportation early in the quarter and vehicles for domestic deliveries in the United States and China toward the end of each quarter. These are often called delivery waves. And while these delivery waves happen every quarter, this quarter is even more difficult as Tesla ran into a lot of supply chain issues early in the quarter, which would still have an effect throughout the general quarter, even regardless of what time zone it was, in this case, the early on into the quarter. And so here's why, if Tesla does go down based off this news, that would mean that AMC goes up if this correlation remains true. And if Tesla decides to go down, why might it go down? Well, over here, we as the AMC stock movement, we understand that Tesla right now, they may just have a decent quarter for deliveries. And with that being said, AMC stock family, thanks again for watching. I'll see you guys next video.